Christopher and I do about 30 to 40 due diligence meetings for annual updates a year. Tack on about another 10 to 15 of other types of transactions. That's a pretty good amount of due diligence meetings that you are conducting on an annual basis. So what we thought was it would be a great idea to put our process down on piece of paper, because we do know that a lot of the folks that are listening in either are potentially internal trustees, management team, or our external trust teams. Either way, we thought that from an internal perspective, it would be great to show our processes here. So on this page, we have 7 different phases, from the first phase, which is the engagement by the ESOP trustee, all the way to the 7th phase, which is the ESOP trustee sets the stock price. Now, when we do this due diligence meeting, we know that we are working, or we are engaged by the ESOP trustee, not the company. We work for the ESOP trustee, which is why when we go and we collect our data in phase 2, our financial data from the management team, and we look at their forecast, and we're able to analyze the information that's been provided, so that in phase 3 we could have a due diligence meeting that is meaningful, and there's a lot of good questions that are asked, and the management team is engaged, and we go over and we exhaust all of our questions. That leads us into phase 4 and 5, where we're building our valuation model, prepare our draft report. We get that draft report out to our trustee with our valuation conclusion. And then in phase 7, we usually have our committee review, where we defend our valuation position for either the annual update or some type of transaction. But that in a simple graph, that pretty much gives us our entire valuation process. Now, when we go to page 9, this is a bit more of I like the milestones of information and documentation. At the beginning, we are going out and reaching out to key members of the management team. It could be the CFO, the COO, it could be the director of finance, it could be the controller. But we're going out and trying to get the information, collect all the information, travel to that due diligence meeting. And what we always say here when we travel, and we'll talk about it a little bit further down on the presentation, but you can see here we have virtual or in-person trustee attendance. For a lot of companies out there, for me personally, I know we at least try to see most of them once every 2 years. Some clients, we go out and we see them every year. That's just the way they like it. The other reason why I think this is also an important step for either the virtual or in person, we see the numbers. We see the numbers across a whole bunch of different companies, but to be able to go to the client headquarters or to a facility or whatever you're visiting, to actually see what's going on with the operations and see how everything's flowing. If it's a manufacturer, remanufacturer, or steel or recycling, you get to actually see what's going on behind the scenes that's generating the financials that we're always reviewing at the end of the year.
And Nick, this is Christopher. For the folks that are unfamiliar, you know, a lot of times we're going out there every 2 years, 3 years. You're seeing new equipment, you're seeing new installations, new builds, really connecting the narrative and the numbers rather than it, you know, just being the annual ESOP valuation. You know, I think from our perspective, we also get to see people. You get to see, you know, are the heads nodding, the tongues wagging, people are talking about what's actually going on. And I think that's very helpful for us as well, the trustee, other people involved in the process, to understand what's the latest and greatest and how has the business changed, maybe significantly, especially in a post-COVID world. I will also add here, Nick, that certainly COVID, people were much more comfortable now communicating here now, 5 years later after COVID. It's a little weird to be saying that COVID was 5 years ago. But being able to speak to, you know, communicating, working with a management team virtually is helpful, is efficient, But I also want to make sure that, people don't lose sight that it is important to still have that in-person due diligence.
100%. And it does connect the dots with a lot of questions that, there's industries that I think you just assume what's going on, but then when you finally show up to see the company and they take you around on a tour and you actually see what's going on, you realize, oh my God, I have very little to no idea of how things are actually operating here. And that's one of the best parts about this job, this industry, is the ability to go see a whole bunch of different industries and companies that you would never else otherwise see. So after that, we have our due diligence meeting. We fly back home. We start our analysis. We build our forecast. We share that with the management team to make sure that everybody is under the same understanding, that our inputs are valid, that the forecast is reasonable, and it ties to exactly what the client, the company is expecting.